Today's webinar is titled Planning for Your Child's Educational Expenses. Our presenter today is Troy Robinson, a 2012 alumnus of RIT and Associate Director of Financial Aid and Scholarships. Troy is actually visiting us for the second time to present this webinar. We're very glad to have him here. With 14 years of probably 14 plus by now, right, Troy? At RIT, he's committed to coaching students and their families on how to navigate through the financial aid maze so that they can make educated choices for pursuing their future career goals. In addition, Troy is an active member on committees at the university focused on student financial literacy, student homelessness, and study abroad programs. Previously, Troy worked at Citibank Student Loan Corporation and was recognized with Customer Service Leadership Awards for his dedication to excellence. He has assisted clients by providing solutions for avoiding default on their federal student loans. As mentioned in the just recently, Troy is an alumnus and holds a master's degree in Human Resources Development. As I said, Troy is back again, and we are grateful he has returned. So, Troy, take it away.
Great. Thank you, Cindy. I want to thank you and your team for inviting me back. It was a very enjoyable experience last time, and unbeknownst to me when I selected this date, today actually happens to be National Financial Aid Day. So it just happened to fall on the right day, and the third Wednesday of every October is National Financial Aid Day. So if you see a financial aid counselor, give them a hug. They'll really appreciate it. So yes, I'm hoping to be able to provide some tips and some suggestions as far as finding financial aid for individuals who've got children getting ready or ramping up to go to college, and I think we're ready to go. So what is financial aid? For a lot of families and students, they don't know what the sources are for financial aid. So primarily there's scholarships. And scholarships are gift aid, and that's money that does not have to be paid back, and it's typically awarded on the basis of merit or skill. And no FAFSA should have to be filed, and the FAFSA is the federal form, the free application for federal student aid, to be considered for most scholarships. So here at RIT, if a student applies and they get admitted, they're automatically reviewed for a merit-based scholarship. There's no FAFSA required. Grants, which is also considered to be gift aid, and this again is that free money that everyone's looking for, money that does not have to be paid back, but this is awarded on the basis of some financial need or demonstrating financial need. So for a lot of schools, like RIT, the FAFSA will need to be filed, and other schools will also include other documents like the CSS profile. Here at RIT, we do not require the CSS profile at this time. Other sources of financial aid to help cover the cost of college are loans. We describe these as self-help forms of financial aid. This is money that either the student and or a parent could borrow to help pay for educational expenses, both the billable expenses by a college as well as other educational expenses such as books and supplies. And then there are things like campus employment and federal work study, which is employment where the student earns a paycheck by working on campus, and they can set aside those funds to help pay for expenses, again, things like books and supplies for most students. So what are the different sources of financial aid? Well, the federal government's a huge one. It offers the federal Pell Grant program, the Stafford Direct loans, and again, federal work study. To qualify this year for a federal Pell Grant, you have to file the FAFSA, and the FAFSA is going to calculate your family's expected contribution, and we'll get into more details further into the presentation. But for a student this upcoming year, for 2017-2018, to qualify for a Pell Grant, that expected family contribution number needs to be less than $5,328. So that's a fairly low EFC. It shows that the family is demonstrating high need for assistance. And a Pell Grant amount for this current year could range anywhere between $606 up to $5,920 for full-time students. Then state agencies provide quite a bit of assistance to college students. Again, in New York State, it's through HESC, the Higher Education Service Corporation. Obviously, if you're joining us from a state outside of New York, you'd want to check into your local state agency. For example, Pennsylvania has FIA, which is the Pennsylvania Higher Education Assistance Agency. New Jersey has what's known as TAG, Tuition Aid Grant, and that's through HESA, the Higher Education Student Assistance Authority. And when working with your state agencies, a lot of states have different deadlines for their applications, so you definitely want to check out their websites or web pages. And when you file that federal form, the FAFSA, when you complete it, at the end of the FAFSA, it will link you to your state agency's application. So don't not go to that and complete that additional application. Most of these will have state residency requirements, and most will not allow your child to travel out of their home state and take state funding with them to an out-of-state school. College and universities bring a lot of money to the table when paying for a student's education, again through merit scholarships and need-based grants. And lastly, private scholarships. I work very closely with the individual in our office here at RIT who is receiving those outside scholarships. And on an annual basis, we get anywhere between $3 and $5 million of funding from outside sources to help pay for students' education. And students should, even in their freshman and sophomore years in high school, start looking for these sources. It's probably going to be way too early for them to start applying. But they could start generating lists of sources or foundations or organizations that can provide funding for them to go to college, and just compile a list so that when they are ready to apply, they already have that research done. Some places to look for outside scholarships, civic groups, fraternal organizations, a student's employer. Here in Rochester, we have Wegmans, a well-known grocery chain, and they offer scholarship funding to their employees. Places like Target, even fast food restaurants like Taco Bell, McDonald's, places that students typically work at when they're in high school, can sometimes offer scholarship funding to their employees. Also think of future employers that would want to hire your student after they graduate, and go to those corporations or companies' websites, and it's probably going to be the HR section of their website, and see if they offer scholarships to entice people into a certain field. Doesn't mean that your child would necessarily ever work for that employer, but they're just trying to draw or attract people into specific fields and to support them in their educational endeavors. Parents' employers, check with your HR area. Maybe your own employer offers some type of tuition benefit or scholarship that the student can apply for. And lastly, I should mention for the alumni here at RIT, if your child is coming, there's the Alumni Legacy Scholarship, and you can find that information on RIT's website. Just go to the search box at rit.edu, drop in the terms Alumni Legacy Scholarship, and it'll take you right to their page and explain what the requirements are and the application process for that. So what a lot of families are always asking is, how is financial aid determined? And it's a really basic financial aid formula for the school. It's the cost of attendance minus the expected family contribution number, and again, you'll hear me refer to that as the EFC, and that's that number, that magic number that the FAFSA calculates when the student completes that, and typically with a parent. And then the expected family contribution number is going to be shared to all the colleges that the student lists on the FAFSA. So that number is going to be constant. And then the cost of education is going to be the variable from school to school to school. So here on this slide, you can see where, in this example, the expected family contribution number for this particular family was $10,000 or $10,000. So going to a state school, the cost of attendance may be $25,000. So the family in this example is showing need of $15,000. If the student chose to go to a community college and the cost for that community college equals the expected family contribution, the student isn't showing any need for financial assistance. It doesn't mean they wouldn't qualify for a federal student loan, but they probably won't be qualified for any need-based grants if that college offers any because they're not demonstrating any need. And then lastly, a private college that's in about the $50,000 ballpark, that $10,000 goes a lot, not as far, and so they're showing a greater need of $40,000. So here at RIT, I wanted to give you an example of what the cost of attendance is for 2017-2018 for an undergraduate student. The top half of this slide shows what we call the billable expenses. That's your tuition and fees, room and board for a student who's residing on campus in a standard dorm room, taking a standard meal plan. So the billable charges for the year, fall and spring semester, is $52,734. So if a family didn't file the FAFSA and the student didn't qualify for any scholarships and they were coming to RIT, they would pay $52,734 to RIT to attend. Then the other parts of the cost of attendance are the non-billable expenses, meaning the institute isn't charging the student directly for these costs. And things to take into consideration are books and supplies, transportation, and some personal costs. And so we estimate the personal expenses on an annual basis to be almost $2,000. So the total cost of attendance would be the combination of $52,734 plus that $1,980. Here's a sample or an example of an award letter. And I just made up some numbers, some nice round numbers for this example. So this is something that a family wants to review and compare when they're looking at different schools. In this example, the annual tuition and fees is $40,000. The room and board is $12,000. The school estimates books and supplies to be $1,000 for the year, transportation to be another $1,000. So the total cost of attendance is $54,000. In this example, the family did file the FAFSA, and the expected family contribution is $16,000. So this student is showing need for $38,000. So this is where the school then determines, okay, how are we going to fill in that hole? What can we offer the student to make it more affordable for them to come to RIT? So in this case, or I shouldn't say RIT, this school, in this case, the school offered a merit scholarship of $12,000 and then an institutional grant of $6,500. The student and the school both happen to be in New York State, and the student qualifies for $500 in tuition assistance program or TAP funding. They also received a scholarship from the state through the Academic Excellence Program for $1,500. And then they qualified for federal direct loans. And the amounts you see here are the maximum amounts that a first-year student can receive, which would be $5,500 in total. This student, because they demonstrate need, can receive subsidized direct loan funding of $3,500. And subsidized simply means that the interest will not accrue while the student's in school, as long as the student's enrolled at least half-time status or greater. And then the other loan funding that the student qualifies is unsubsidized, so that would accrue interest while the student's in school, and the student was also awarded federal work study. So out of the need demonstrated of $38,000, this school was able to provide $28,000. So there's still what we call a gap of $10,000. And so we're going to discuss some other ways that can fill in that gap. It may be those outside scholarships I've already mentioned, because the student could bring some funding in to help narrow that gap. And then there's some other loan opportunities that the family may want to take advantage of.
We do have a question, Troy, because it relates to this. Jason is asking, my EFC is staggeringly high. I'm worried I made a mistake. What assets can be excluded? Also wondering what the weighting is between salary and assets in the EFC calculation.
Sure. So when you file the FAFSA, you will get the student aid report. It's sent to the student electronically to the student's email, And that's your opportunity to review it, to determine if any mistakes were made. Maybe you added a zero and you weren't supposed to report $100,000 in assets, but only $10,000 in assets. As far as income and assets, assets for the parent are pretty well protected. Student assets in the EFC calculation, they take a significantly higher chunk to determine the EFC. So any assets reported under the student's name, 20% net value of those assets are being used in the EFC calculation, whereas in the parent assets, it's a range between 3 and 6% approximately of the assets, and they're not using any retirement funding in that calculation that you have in like a 401k or a recognized retirement plan. So if you've reported those in error, you certainly want to make that correction on the FAFSA. Your retirement plan should not be counted in the FAFSA. As far as parent income, there's a lot of different factors that impact the percentage of income being used in the EFC calculation. Age of the oldest parent, how close they are to retirement age, number of people in the household. So the range could be anywhere between 22 to 47% of the parent's income. And for student income, and a lot of students don't show much income because, you know, a high school student generally doesn't earn a lot of money, but they are taking about 50% of the income that a student reports on their FAFSA. The one thing we haven't gotten into, and we will coming up, is the fact that the FAFSA now looks at what we call prior year. So up until about a year ago, families would report the previous year's income and tax information on the FAFSA. Now the Department of Ed has changed that, and you're going back 2 years. So anyone who's filed the most recent FAFSA for 18-19 should be using 2016 income and tax information.
Thank you.
So the expected family contribution, and that question was very timely. This slide goes over some of the information I just explained. It is looking at parents' prior year income, students' prior year income, and again, that's probably significantly low. Value of parents' assets at the day that the FAFSA is filed, value of the student's assets as of the day that the FAFSA is filed. So one workaround to that is if a student has to buy a computer or maybe a mini fridge for their dorm, or maybe they're going to bring a car to school, before you file the FAFSA, spend down your student's assets so less of them are being used in the EFC, especially for things like a laptop. Your student's probably going to need something like that once they go to school. Also, with the parents' assets, if you have some consumer debt out there, maybe it's better for you to pay that debt down when you have a high interest rate credit card rather than reporting the total amount of your assets. Use some of your assets to pay off some debt so that you're showing less assets on the FAFSA. As I mentioned, the number of household members will play a factor in the FAFSA EFC calculation, as well as the number of people attending college, excluding parents, for that FAFSA year. So if you have multiple students going to school at the same time, you will be filing multiple FAFSAs, one for each student. And their EFCs could be slightly different because the student income and assets would be different, but you're probably going to be reporting the same parental information on each FAFSA. And then the age of the oldest parent. Like I said, the closer to that parent is to retirement age, the more protected their assets are.
Very quickly, a question from Natalie. Does the FAFSA take into consideration the amount of equity in the home?
The FAFSA does not. That is not considered to be an asset, but schools that require the CSS profile, the profile will ask information about the primary residence, but the FAFSA does not. And here at RIT, we do not inquire that information either.
All right, and because it just came in and you mentioned it, quick question from Kimberly on where the student lives. So the question is, student lives with mom and stepdad and is claimed on their tax return. Do we use the stepdad's income on the FAFSA as opposed to the dad who does not claim the student?
Sure. So in cases of divorce situations, it's what the federal government defines as the custodial parent who puts their information on the FAFSA. The custodial parent is the individual who provides more than 50% of the student's support. So in this case, it sounds like it's the mother, the biological mother who the student resides with, and because she's remarried, she would also need to include the stepdad's information. The biological father, in this case, his information is not included on the FAFSA because he does not reside in the household. In most cases, there are some extreme situations where we have seen where the divorced or separated families still live together. But again, as I said, the FAFSA does not typically collect that information, but the CSS profile would ask that the family provide information about the parent who's no longer living in the household, regardless if the other parent remarried or not.
Thanks, Troy.
So again, all these questions are leading into some good slides, because this next slide, a lot of times families say, well, you know, I don't claim my child. He hasn't lived with me since the age of 18. He moved out of home. Not that they have a bad relationship. The student is just very independent. It's just that culture of that family. Do I still need to provide my information, the parent information on the FAFSA? And what this is really getting to is whether the student's considered to be dependent or independent. So these questions are what we call the dependency questions on the FAFSA, and the student has to be able to answer yes to at least one of them. And if he answers or she answers yes, then the parent's information does not need to be added. The most common ones are, will you be 24 years old by December 31st of the school year, which you, the student, are applying for financial aid? If the answer is no, regardless if that student resides with you or not, and they can't answer yes to one of these other questions, the parent information is required. Now, the next question is interesting. Will you be working towards a master's or doctorate degree? If you have a genius in your household and they get to grad school by like the age of 19, regardless of their age, they're automatically considered independent because they're pursuing an advanced degree like master's or a doctorate. Are you, the student, married or separated but not divorced? If they can answer yes, they're considered independent, again, regardless of age. If the student has their own children that receive more than half of the support from them, they are considered independent. Or if they have other dependents that are supported by them. If they are currently serving on active duty in the U.S. Armed Forces for purposes other than training, again, regardless of age, the student's considered independent. Or if they're a veteran of the U.S. Armed Forces. And then the final questions under number 8 all pertain to whether the student was in foster care or ward of the court, or was an emancipated minor, or was homeless. So again, in order to be considered independent and not have the parental information required on the FAFSA, the student has to be able to answer yes to one of these situations. So where do you go to file the FAFSA? Very, very, very few families file FAFSAs by paper anymore. Everyone's doing it online at FAFSA.gov. And up until 2 years ago, you would file the FAFSA as early as January 1st. The government moved that time frame back, so families now can jump in and file that FAFSA earlier if you like. Now remember, you're using prior year income and tax information, but the assets you're reporting are of the day that you file the FAFSA. So if, again, you're trying to spend down some of those assets, you may want to hold off before you file the FAFSA. And for 2018, 2019, you're reporting income for calendar year 2016. And there's a great tool that is back up and running. It was down for a little while last year. It's the IRS DRT, Data Retrieval Tool. And this is where a family can elect to have the 2016 tax information downloaded right into the FAFSA, so they don't have to pull out their old tax forms. They don't have to go to their tax advisor to pull that out. This data retrieval makes life easier for both families and for schools because that information should all be accurate. Now, the thing that's different this year, because there was some security concerns by the IRS, some identity theft issues, when you select to use the DRT, when you're going through the FAFSA and you get to the questions where pre-populated your income information and tax information, you're not going to be able to see what the IRS put into the form. You're going to see the phrase transferred from the IRS. So you just have to trust that the information that you are getting from the IRS is accurate. You always have the option to add the information in manually instead of choosing the DRT, but we have just found that there's more cases of human error, not intentionally, just error, that cause the family to be selected for processes known as verification, where the school then has to ask the family to turn in tax documents or W-2s, and that can just slow up the whole process of aid being awarded as well as aid being dispersed. So if you had no issues with filing your taxes in 2016, you didn't have to submit any type of amendment, you don't have any unique or unusual circumstances, I would recommend doing the data retrieval tool. When you file the FAFSA, both you as a parent and the student will need to sign the FAFSA. A few years ago, that was referred to as a PIN number. You would each create your own 4-digit code to represent your electronic signature. In the last few years, that strategy has moved to more of a username password type of profile. And again, you as a parent would create your own username and password, which is referred to as an FSA ID, and then your student would create one as well. And so if you're filing multiple FAFSAs because you have a couple of students going to school in the same year, your FSA ID as a parent remains the same, but each student would have their own. And anytime you go into the FAFSA to make any corrections, both you and the student needs to re-sign that, or it becomes a reject or an error that the school has to resolve. And again, that just causes things to slow down. So merit scholarships. When you're looking at financial aid awards and your student has been awarded a scholarship from a variety of universities, one of the things you want to ask about is what was the selection criteria, or if you're inquiring before your student's been awarded any merit scholarships, what's the application process? As I mentioned at the beginning of this presentation, here at RIT, the majority of our scholarships do not require an application. The student simply has to apply to be admitted, and the student's automatically reviewed. But that may not be true for all the schools that your student's interested in. You would definitely want to reach out to the admissions office or the financial aid office of the colleges or universities your student is interested in and ask, is there any other applications that are required to be considered for their merit scholarships? And then once the student has been awarded, you definitely want to understand what the renewal terms and what conditions the student has to uphold in order for that scholarship funding to be renewed from year to year to year. Was the scholarship awarded just for the student's freshman year? Is the scholarship renewable, but is it tied to a GPA? Is it a cumulative GPA? How often is that reviewed? What if my child decides to change majors? Is the merit scholarship tied to a specific major? And will they lose it if they decide to take a different educational route at that college? Or if they don't meet the GPA requirement, do they lose the scholarship entirely? Or is it reduced? How can they get it back? Here at RIT, the majority of our scholarships are reviewed annually, and the student needs to have a cumulative GPA of a 2.8. And if at the end of spring term they don't have a 2.8 GPA cum, the scholarship for the following year is reduced only by $500. It would never go lower than that. So a student who had been awarded, let's say, a $15,000 presidential, at the end of their first year, their GPA is only a 2.79, not a 2.8. We really review it that closely, but a 2.79. Their scholarship next year would be $14,500. Then at the end of the spring term of that second year, we review it again. If the kid is back up to 2.8, then they're in their third year, we reinstate the scholarship back up to $15,000 in this example. Or if they're still not back up to a 2.8, we don't knock it down another $500. So here at RIT, you kind of know what the safety net is, but that's the type of questions you want to ask other colleges and universities. So when we were looking at the award letter and we were talking about how there was a gap because the full amount of need wasn't being covered, or maybe even if the full need was being covered but the family can't afford to pay the full expected family contribution that the government calculated, what are some ways that they can help pay for the cost of education? One is the Federal Parent Plus loan. This is a loan in a parent's name. It does require a separate application and can be applied for at studentloans.gov. There is no income requirement, but it does have a credit review component, and the loan can be deferred while the student's in school, or the parent can elect to make payments while the student's in school. The interest rates for the Federal Parent Plus loan as well as student loans are determined in July, and I have a slide further into this presentation that goes over that. And you would apply on an annual basis. So maybe in the first year you need the Parent Plus loan, but in the second year you don't because you came into some funding or you just have some savings that you want to tap into at that point in time. Because a common misconception is a lot of families think they apply for the loan for the full 4 or 5 years that the student's going to be enrolled. No, you file the FAFSA each year. You determine what aid is needed each year to make up the difference, and then you submit the application if you're going to go the Parent Plus loan route. A lot of schools offer payment plans so that you can break up the semester payment. So maybe it's not that you can't afford to cover the amount that's not being covered by aid, but you just need it broken up. Here at RIT, we offer tuition payment plans, and you would work with the billing office with that college. You would want to ask what is the fee for that service, because a lot of schools, including RIT, do charge a small nominal fee for that service. There are things like tuition prepayment plans. So for families who don't qualify for any need-based assistance, they can lock in the tuition rate by paying multiple years' worth of tuition up front. So for an example, a family who's sending a student to RIT who doesn't qualify for any need-based aid, but they can afford to pay maybe 2 or 4 years' worth of tuition up front, they're going to lock in that tuition rate and they don't have to be concerned about the tuition increasing from year to year. So that's where they can make a little bit of a savings. One benefit to RIT is our cooperative education program. It's a great opportunity for students to work with employers, and they're getting a very good paycheck in a lot of situations. So when a student is on co-op, they're typically not taking any classes. They're still considered to be a full-time student, so their loans that they may have taken out are still deferred because of their full-time student status. They're gaining some experience that's going to be valuable for when they start job hunting after they graduate. And any income they made during the co-op experience, they can use that to help pay for a future tuition if they set some money aside, a future semester, or maybe living expenses in the future. Also, when they file the FAFSA, any earnings in a co-op does not get added into that EFC calculation. So a student won't be dinged if they're earning a pretty decent paycheck through an outside employer if it's through a co-op experience. And there's a lot of colleges out there that offer co-op experiences, so definitely shop around and check that out if that's something of interest for you and your student, or if you consider that to be important with your college choice. We hope that students are working over the summer prior to coming to school and setting some of that money aside to help pay for college costs. And then again, a lot of students will work on campus. I think the last number I heard was close to 6,800 students work on campus here at RIT, so there's usually a lot of opportunity. But that's a good question to ask schools with the federal work-study or campus employment programs. How do students find jobs? Here at RIT, the student works with our student employment office and applies for positions they're interested in. We don't set jobs aside for a student, whereas at other, maybe a smaller liberal arts college, we'll have jobs assigned to the student, and it's the student's choice whether they decide to pursue that or not. And again, like co-op earnings, the federal work-study earnings do not count against them or factor into the EFT calculation. Excuse me. So private scholarship searches, I think we mentioned that pretty thoroughly. 529 plans, these are college saving plans that a lot of families set money aside in to help pay for college education, as long as that is being used towards educational purposes. There's no tax penalty. You may want to work with a tax advisor or tax consultant or an investment advisor in regards to 520 plans. There are tax credits and deductions that help make college more affordable. I always say I'm not a tax advisor, but you can certainly find this information about the American Opportunity Tax Credit and Lifetime Learning Credit through IRS website or again through an investment advisor. And then last case suggestion is private student loans. Maybe the parent doesn't want to take out a Parent Plus loan. Maybe there's another family member who's willing to be a co-signer. Private student loans are through private lenders or banking institutions. Sometimes they're referred to as alternative student loans. In most cases, the student's going to be the primary borrower, but someone will need to act as a co-signer, especially for a student coming right out of high school. They just do not have the income or credit history to be approved for these. And this is a buyer beware kind of situation. You want to make sure you understand what your child and you, if you're the co-signer, are getting yourselves into. Are these loans deferred while the student's in school? What's the interest rate? Is it fixed or variable? Is there a grace period after I leave school before I have to start making payments on the loan? What if I become unemployed? And the problem with these private loans compared to a federal loan, with the federal student loans, there are some insurances and precautions, safety precautions. If the student becomes permanently disabled, those loans are forgiven. They don't transfer to the parent or someone else's name. With the private student loans, obviously, if something happens to the student, the co-signer is still going to be on the hook for those. So the basic steps: student wants to apply for admission. Student and parent at any time can apply for the Federal Student Aid ID, even before filing the FAFSA. File the FAFSA when you're prepared and ready to do so. Make sure you understand what the deadlines are for schools for doing that. And then watch for the student aid report, which will be sent to the student's email, and make any corrections. Maybe you forgot that grandma lives with you in the household and you just didn't count her. Well, you would want to go back and make that correction, because as we saw in the previous slide, the number of people in the household could have a factor in the ESC calculation. So file any additional forms like the CSS profile or any scholarship applications that other colleges and universities may require. Make sure you're filing the state agency forms, and again, as I said, that should be linked to the FAFSA towards the end and should be pretty easy to jump over to that state agency's application. And some of that information may be pre-populated from the FAFSA. Have your student research other sources of aid. A great place to look, and I provide a slide later, is going to other colleges' financial aid web pages and checking to see what outside scholarship searches they provide. RIT, in our office, we have a pretty in-depth outside scholarship search engine that's free for anyone to use. It doesn't matter. It's whoever stumbles across our website and wants to start looking for outside scholarships. It's a free, reputable site. Never pay for an outside scholarship search. You know, students should be able to do this on their own. You just don't want to be scammed by paying for something that just finds you nominal amounts of funding. Work with your guidance counselor. Keep photocopies of all documents submitted to outside scholarship agencies and foundations, as well as to schools. And one question that comes up quite frequently now that the FAFSA has moved to what we call the prior year income and taxes, what if your situation has changed since that year? Maybe there's been a job loss or a job change. Maybe there was an inheritance that year due to the death of a family member. You can reach out to the schools, and we ask that you do so and explain, you know, what is impacting your ability to afford that college, what has changed from 2 years ago. They're probably going to want you to put that in writing, And obviously some cases are going to be considered more than others. A family who's going through an illness or a job loss, that's pretty extreme, and schools want to be able to help that family compared to another family who may say, well, we just purchased a second home on the lake. That may not provide any additional assistance for that student. So as I mentioned, these were the interest rates for the current year's loans. For the direct subsidized loan, the interest rate is 4.45% this current year. Again, that rate doesn't really kick in until after the student leaves school and after the 6-month grace period. But that's the interest rate tied to that loan this year. The unsubsidized loan has the same interest rate, and again, that one would start accruing from the first day of disbursement, and it's up to the student and the family to elect to either pay that interest while it accrues, or it can just keep growing and then be capitalized to the loan after the student leaves school after the 6-month grace period. With federal student loans or federal Parent Plus loans, there are no prepayment penalties, so anytime you come into some funding and you want to send that into your lender, you can certainly do so. The direct unsubsidized loans for a graduate or professional student are at 6%. And then that Parent Plus loan that we mentioned that a parent can take out. And there is a similar loan for professional graduate students. That interest rate this year was at 7%. And this is the search engine I had mentioned. This is at our website, rit.edu/financial-aid. And if you go along the left-hand side, if you go to the scholarship section, scholarships and grants, one of the options is an outside scholarship search engine that you can select, and you can put criteria in. Or if you don't want to do that and you want to see everything that offers, you just click on the appropriate link, and you'll find hundreds and hundreds of scholarships that the student can start investigating. Doesn't mean your child will qualify to apply for each one, but at least it's a great starting point. And here are some websites. This is the financial aid website, the very top one for RIT. Then for our New York State residents, here's the website for HESC. They have quite a few scholarships themselves, as well as if you miss the TAP application, the Tuition Assistance Program application, after filing the FAFSA, you can always go here to complete that. And again, for our non-New York State residents who may be joining us, you would just want to check with your state agency and their deadlines. For more information about federal aid in general and student loans, studentaid.ed.gov is a great resource. And again, you file the FAFSA at FAFSA.gov. So I'm sure I just dumped a lot of data on you, and I think at this point we may have some time for some questions.
Thank you, Troy. We do have some questions, and those of you who have yet to submit them, please submit your questions at this time through the chat function. So we've got a couple here, Troy, one from Neil. Is there value in completing the FAFSA prior to starting college search? The child happens to be a junior, to get an idea what the contribution value might look like, or do the rules change significantly year from year?
I wouldn't say the rules change significantly from year to year. There's no harm in filing a FAFSA. It just wouldn't be directed to any schools. There is, I'm forgetting the words, but there is a form that you can fill out that provides similar data as the FAFSA through FAFSA.gov. It asks and mirrors the same type of questions, so if you don't want to file the true FAFSA, you can fill out this worksheet and it'll give you a similar idea, but there is no harm if you end up selecting to file the FAFSA. The bigger question is how much information is going to change from one year to the next in your own situation, whether it's your income, your taxes, the number of people in the household, things like that.
Great. Hopefully that answers it, Neil. A question from Kimberly. She's asking, her student's aunt is saving through New York State's 529 plan. Is that taken into consideration in calculating the EFC on the FAFSA?
So it's not. used to be called the grandparent rule, because a lot of grandparents were setting money aside in 529 plans. That is not considered to be an asset of the student, but any distributions that is received from that 529 plan may be caught up in a future year's FAFSA as untaxed income. So the workaround to that is if your aunt is willing to sit on that funding, and if you don't need it immediately, use the 529 plan in that student's last year in college, because they won't need to file a FAFSA in the future, and so those distributions will never need to be reported.
Okay, Kimberly, hopefully that answers the question. Another question has come in terms of planning for all of this. How much in advance do you recommend that families and students start beginning to source college funding assistance?
So for things like 529 plans, the earlier the better. If you can do that when they're still, in preschool, I mean, the power of investment with the earnings on investments, the longer you can put money aside, the better for you. So for anything like 529 plans or other savings vehicles, the earlier the better. For scholarships, I keep mentioning maybe freshman and sophomore year, just to have the students look and check in with guidance counselors or web searches, and just to start compiling lists, because we all know that senior year can go really quickly. So if they can compile the list ahead of time and just plan on knowing what scholarships they're interested in applying to, and maybe even start jotting down some ideas, whether it's an essay or pulling together a student resume that the foundation or organization may require. If you have some of that in rough draft form, at least, it'll just make life easier for the student. And then as far as looking at what schools the student's interested in, really depends on what the student, where the student is at socially, mentally. Have they decided what interests them? It isn't uncommon for a student to change their majors. You're speaking to someone who initially started out in pre-optometry, and so I'm obviously not an eye doctor. So it isn't uncommon for students to change their minds once they're in school. So maybe liberal arts is the way to go for your child if they haven't figured out what they want to do before going to college, to get a good liberal arts foundation, or maybe business school. But there are a lot of students who are very dedicated in knowing what they want to do, coming to RIT or to any school. And so if they know the field they want to get into, that may also help narrow and focus their scholarship searches as well. Also reviewing what schools they want to apply to.
So in follow-up to what you just shared with us, Troy, there's a question that's come in that says, are there certain areas of study that are more likely to be awarding scholarships, like sciences? There's more opportunity there than the humanities? Is that something to consider? Is that even a thing?
It might be a thing at a specific college. A lot of times maybe a school is not getting a lot of students applying to a specific degree or major, but you're never going to really know that in advance. Sometimes a woman applying to a science field or an engineering field or a technology field, a lot of schools are trying to vie for that type of student, so they may be able to offer more scholarship funding to attract them. But to say that a student interested in the humanities or liberal arts wouldn't be offered a scholarship, it really depends on the school.
Okay, so another question. Earlier on in the presentation, you talked about the cost of attendance and then the need, and then the award, and then how to fill that gap. So what if you do all the right things and you apply for scholarships and you just don't have the funds to fill the gap? What are the options for students and families?
Yep, so if you can't find all that free money, then it really comes down to, are you willing to take out loan funding, additional loan funding? And again, that's going to be primarily either a Parent Plus loan, a private student loan. Some families will tap into home equity, and that's a personal choice. They may use a home equity loan or line of credit. Some parents will borrow against retirement. I don't necessarily think that's a great strategy, but we have seen people do that as well. And whatever your family's choice is doesn't mean it's morally wrong or right, whether you can do that or not, versus another family that may make a different decision. When I meet with students who come to our open houses who just say, you know, RIT is my number one choice, I really want to come here, but we just can't swing it, you know, and there's no other reasons to appeal. You know, that's the first thing I'm going to check to see is there some reason that the student can appeal based on health of a family member or change in economic situation. But if they've gone through all that and they still can't afford it, well, if RIT is your goal to get that degree, maybe you want to consider going to a local community college where it's more economical for you for a couple of years, or maybe a state school, and then transfer in. Once that student comes to RIT, they'll still be considered for scholarships as a transfer student. And once they walk down the aisle and earn their degree, the diploma doesn't say student was only here for 2 years. Their degree is no different than a student who started with us from day one. So you may want to have those type of conversations with your student. What's your goal? Is your goal to earn a certain degree? Is your goal to earn a certain degree from a certain college? Okay, what are some different ways that we can do that? And again, the decision of whether you want to take out additional loan funding or not will need to be a personal decision between you and your student.
Great, thank you. So for New York State residents, not too long ago, the governor announced the Excelsior Scholarship Program. So how does that factor into this whole world of financial aid?
Yep, we are aware of the Excelsior Scholarship, and I did bring a document with me because I'm not an expert on it because, again, it is for community and SUNY state schools as well. So that scholarship program does have a separate application, and so this past year was the first year. And so with the Excelsior Scholarship Program, a family had to meet certain conditions. Obviously, they had to be New York State residents. And for the first year, the household adjusted gross income could not total more than $100,000. And then for the 18-19, that amount increases to $110,000. And then for 2019-2020, the adjusted gross income could not be more than $125,000. So they collected applications, they made the awards. My suggestion is if your child is interested in that program, to contact your local SUNY school or CUNY school, City of New York College, and ask to speak to a financial aid counselor, or go to HEF's website, which is, again, up on the screen right now, the hef.newyork.gov. That'll have a lot of the information that I actually gathered from there. The other program that came out this past year is what we call the Enhanced TAP Award. And this is for students who still decide to go to a school in New York, but a private school. Now, this could be an additional up to $6,000, but the school has to participate in it. This past year was the first year, and again, it has a separate application process. Out of the 95 private schools in New York, only 29 signed up for them. RIT in its first year elected not to. In years past, there have been other programs. There was a state loan program a few years ago called New York Helps, and we participated in that from day one. But that program went away within 2 to 3 years. So I think RIT and a lot of private schools are just being a little more cautious because when they unrolled these programs last year, it was towards the end of April, beginning of May, and a lot of students had already made their decisions on where to go. So it wasn't really fair for schools to have to change and comply to regulations that were still being reviewed and trying to get a better understanding. No decision's been made for the 18-19 year whether RIT will participate, but it is a good question to ask if your child's looking at a private school in New York State to ask the financial aid office or counselor if they participate in the Enhanced Tuition Awards. And again, if you go to HEF's website, it'll provide you more details as well.
Thank you, Troy. We have a few minutes left, but I don't see any additional questions, so we're going to wrap it up. If you in the audience think of something once this webinar is done, feel free to email those questions to ritalum@rit.edu. I will take all of those questions and get them to Troy and get answers back out to you via email. You can also tweet them if you would like to the hashtag #MeRITWebinars, and we will do the exact same thing. So reminder, this webinar has been recorded and it has been fully captioned. Look for an email in your inbox shortly. It takes us a few days. So don't look for it this afternoon because it won't be there. It'll be there in a few days. So I want to thank Troy again for making a repeat visit here. This is very good information, especially I've got a student coming through, so I'm always happy to hear all this because it's hard to navigate those worlds. So thanks to Troy for his expertise. Thanks to all of you for joining. Our next webinar is November 8th. This is an interesting topic titled An Introvert's Journey to Leadership, presented by RIT alumnus, adjunct professor, and information security officer, program manager Ben Wolk. In this webinar, and using his own life experiences, Ben will share the strengths that introverts possess with the strategies they can invoke to better enable them to pursue and successfully achieve leadership roles in their organization. Thanks to all of you again for joining us. When you exit, please close the WebEx window, and please tell us what you thought of today's webinar by taking the very brief and optional and anonymous survey upon exiting. Have a great day.